From Kansas State University, this is Agriculture Today. Eric Atkinson with you. Here's what's coming up. K-State's Robin Reid discusses the USDA Agricultural Risk Coverage program payments, soon to be dispersed to you crop producers for your 2020 crop production. She reports that the county ARC payment rates have now been determined. She'll also talk about the ARC-PLC market price projections for 2022 crop production, how that information can be useful to you producers as you plan for the ARC-PLC sign-up next spring. Also from the Farm Service Agency, Chuck Pettijohn will confirm that those 2020 ARC-PLC payments will indeed be delivered to you producers very soon. And K-State's Gus van Der Hoeven awaits with another Stop, Look, and Listen. All that here on Agriculture Today. You're tuned in to the K-State Radio Network, and welcome once more to Agriculture Today. The bulk of today's broadcast on USDA crop program payments, information on the ARC and PLC payments for 2020 to share with you, and more. As joining us is Robin Reid, agricultural economist, K-State Research and Extension. Robin has just been cranking through the updated numbers on those payment levels, and she's going to pass that news along to us today. And some backdrop on this again, this is to stress, Robin, the 2020 production year, right?
Right. So how this works with these USDA programs is we have to get through harvest and then have an entire marketing year to determine what the marketing year average price was nationally for that commodity. So, for example, with our corn, when we harvest that in the fall, that marketing year starts September 1st, and we get a price every month from USDA for corn that's sold across the United States. It's weighted by the amount of corn that's sold each month, and then by the end of August 31st, we can calculate what the marketing year average price was for that commodity, and that determines our level of PLC payments and ARC County payments. So that is why it takes an entire year, or in the case of wheat, even more than a year, to get the payment on the crop that we harvested in 2020.
And you have just recently gone through an update of those county ARC rates.
Right. So I'm sure many people are familiar with these programs by now. We've had them since the 2014 Farm Bill. But PLC is the program that pays based on the national marketing average price compared to a set guaranteed price, and then the difference between that times your program yield with FSA. So for PLC, the only commodity between wheat, corn, grain sorghum, and soybeans are four big commodities here in Kansas. The only commodity that triggered a PLC payment between those would be wheat. So we had a marketing year average price of $5.05. The guarantee on wheat's $5.50. So that's a 45-cent per bushel PLC payment times the individual's farm yield with FSA, their established yield with FSA. The other prices that came in, corn, the marketing year average was $4.53. Grain sorghum was $5.04. And soybeans were $10.80. And just to kind of highlight there, too, that maybe seems a little low for soybeans compared to what we saw this summer. But remember, it's a marketing year average, and it's weighted based on when the commodity's sold. And we typically have a lot of our grain sold right after harvest or in January after the first of the year for tax purposes. So the prices in those months are very influential on that marketing year average.
You do have figures as well to give us an idea of the impact here as far as the enrollment by Kansas producers in those options.
Yes. So a lot of our grain, sorghum, and our wheat have chosen PLC for quite a while now, and that's because they've been below that threshold, $5.50 on wheat, $3.95 on grain sorghum, and there's been some fairly large PLC payments for those commodities. So in the 2020 enrollment, again, 93% of our grain sorghum base was in PLC, 93% of our wheat base was in PLC. And just remember there, too, a lot of times producers are growing corn and soybeans on their wheat and grain sorghum base. So just because you're not growing these commodities, you might still have base in them. So it's important to always watch the payments under all these commodities. As far as corn, About 22% of our acres here in Kansas in the 2020 election was in ARC, and about 73% of our soybeans chose the ARC County program. So not a ton of enrollment in ARC County in 2020. I will say when we made this election back this March for 2021, the crop that we're harvesting now, our corn actually flipped to about 50-50 ARC County and PLC. 71% of our grain sorghum went to PLC, so that's down from 93%. 18% of our soybeans went PLC, and then 77% of our wheat went PLC. So we're starting to see a shift actually back towards ARC County as we're seeing some higher commodity prices. So I'll talk about that towards the end as we talk about strategies moving forward for making this election next year.
Absolutely. But keeping it back to the 2020 crop, and you look at the interactive maps that you have put together, county by county, on how whatever payments are going to be available will shake out. What are you seeing there, Robin?
Yeah, so some trends across Kansas, and again, go on Ag Manager, go under the Farm Policy section and look at the actual ARC County payment maps. But we saw corn basin Kansas, non-irrigated corn in a lot of our western counties are seeing payments under the ARC County program. There was a yield loss there that triggered payments. We also are seeing some payment on corn base down in the southeast corner of Kansas. So Cherokee, Bourbon, Crawford, Labette counties all are showing a payment under the ARC County program. We don't see any payments on the irrigated corn base, so that wasn't enough of a yield loss there to trigger any payments. When we look at soybeans, like I said, most of our soybean base acres are in ARC. What we're seeing is not many payments, and where those payments are tend to be the counties that don't have much soybean base anyway. So we see some payments in Logan County, Hodgman County, Morton County, Rawlins, Decatur, a little bit in McPherson and Harvey, but overall there's just not much soybean payments because most of our yields in 2020 were not enough to trigger a loss in the ARC County program. Grain sorghum, again, we saw some, just like corn, some non-irrigated grain sorghum payments in our western counties, Wallace, Greeley, Hamilton, Grant, Stanton, Morton. And then even some irrigated grain sorghum payments in Wichita, Scott, Kearney, and Grant counties. So other than that, not a lot of payments across the board, just kind of some counties that had some low yields in 2020. As far as wheat, we actually had these maps out. These payment rates were announced this summer, but we have a fair number of counties scattered throughout Kansas that will be receiving wheat payments both on irrigated, non-irrigated, and counties that have combined ARC County guarantees. So if you do have wheat base and are in ARC County, you definitely want to check and see if you're one of those counties that'll be getting a payment.
Well, again, reference all of this information on agmanager.info. Once more, the interactive maps that tell you what kind of payments will be forthcoming, if any, on ARC participation in these payments that will be delivered from the USDA here soon, and we'll hear more about that from the FSA's Chuck Pettijohn in a few moments. But do want to follow up on what you brought up just a second ago, and that is thoughts on planning for enrolling 2022 crop production in either ARC or PLC. We'll pick up on that after this break. Along with us here is agricultural economist Robin Reid of K-State Research and Extension. We'll be back shortly here on Agriculture Today. Agriculture Today continues now, and once more in the guest chair is K-State agricultural economist Robin Reid, talking with us about ARC and PLC program payments. Robin, circling back around to something you mentioned just a moment ago, the 2021 percentage elections have been determined here. But as far as making elections on the next go-round and how these programs are trending, you had some input you wanted to pass along.
Sure. So, we'll be making this election again by March 15th, same deadline as your crop insurance, and you will decide ARC and PLC for all of your commodity base again this year. So, as I mentioned earlier, we are starting to see a shift towards ARC County and away from PLC. And most of that is just because of the higher commodity prices right now. So I'm going to run through the projections that are out there as far as what the marketing year average price might come in at for the crop that we will harvest next year.
And that was generated right here at K-State, right?
Yeah, so there's we do our own monthly estimates, and then we also look at the WSDA report, long-term projections from USDA, FAPRI, and then even the USDA ERS. But basically what they're looking at here in the next marketing year, wheat prices around $6.70. So if you compare that to $5.50, that's quite a bit higher than anything that could trigger a PLC payment. And then for corn, around $5.75, which is a good number for a corn price, but that's well above $3.70 where it would trigger a PLC payment. Grain sorghum, anywhere from $5.50 upwards of $6. And again, that's got to be above $3.95 to trigger a PLC payment. And soybeans, we actually have projections in this next year above $13. So comparing that to $8.40, which PLC would pay on, that's quite a bit above that number. But I will preface this with there's a lot of uncertainty. So when you're signing up, that is for the crop you're harvesting next year. And then there's an entire marketing year after that to determine the price that's going to be paid on. So I still think there's a place for PLC for producers that are risk adverse. We know crop prices fluctuate. There's going to be hills and there's going to be valleys. And PLC does offer some good downside price protection for those valleys. And that's mostly because it doesn't cap out near as fast. The ARC County program, it only pays on 10% of the calculated loss in revenue. PLC will keep paying unless we hit the loan rate with that marketing year average. So that is a much bigger threshold that a payment will keep accumulating. So I'm not necessarily going to say either program is wrong to pick. ARC County, if you believe these higher prices are here to stay for a while, will provide payments when there's a significant county loss. And that's been the soybean mentality for years. Most of our soybeans have gone ARC County because at $8.40 PLC rate, we've never actually hit. We've came close, but it's low enough that most of our producers take their chances in ARC County because it offers that downside production or downside yield payment. But as I said, PLC still offers a lot better price side protection. Again,
though, it would be beneficial to a producer to start thinking in these terms with that sign up all that long from now and look at the numbers and process how that might play out for their own situation. That's what you'd like them to do.
Absolutely. I'm sure everybody's in the combine right now or the grain truck, and probably PLC and ARC is one of the last things they're thinking about. But, again, we just are in the routine of making this every year until we get a new farm bill. And, we hear things all the time of the uncertainty out there. So it is still a very valid risk management tool. Even if we didn't see payments this year for your commodity base, that is actually a good thing. We want higher prices. We don't want to be getting PLC and ARC County payments because that means something went wrong.
Yeah. And do have a look at those projections on prices that will apply to the 2022 ARC-PLC elections. All of that is on agmanager.info for your use, producers. Always good work, Robin. Thank you for going over it with us.
Thank you, Eric. My pleasure.
From the Agricultural Economics Department at K-State, Robin Reid, K-State Research and Extension. As to those ARC program payments forthcoming for 2020 production, thanks to the recent actions of Congress on continuing the federal budget, those will be on their way very soon. According to Farm Service Agency State Executive Director for Kansas, Chuck Pettijohn.
With the passage here of the continuing resolution, we did get funding to move forward with operations, and they did put in that the ability to make some of the payments that come out on these contracts that carry over from year to year. So one of the big ones that we see come out is our Conservation Reserve program payments. They'll be coming out. We'll start pushing those out in waves based on the years of those contracts because there's different eligibility rules that fell under certain years of when the contracts were approved. And so those will start coming out in waves. And then we'll have payments around our ARC IC payments. They'll be starting to come out as well. Now, if you're anticipating a payment and don't you don't see that payment show up in your direct deposit, well, certainly get a hold of the county office. There are some annual requirements that need to be met in order for those payments to be made as far as reporting acreage, eligibility documents, and the like. And most of the times the offices have reached out to those individuals to make sure we got everything ready so we can just push the payments out. But we will be making that cycle over the next several weeks. The national office, they kind of mandate which ones go out next. We'll keep you informed locally, the offices will, of what's being pushed out. And keep in mind, most of those are direct deposit. We get producers calling us wanting to know when their payment's coming, and if they call the bank, a lot of times they're already there.
The Farm Service Agency's Chuck Pettijohn on the expected delivery any time now of those USDA crop program payments on 2020 production. You're listening to Agriculture Today. This is Agriculture Today. Stop, look, and listen.
It really looked at us and studied us.
That's Gus van Der Hoeven of Kansas State University with comment on life in rural Kansas.
It's a week ago that in the early morning, as we again enjoyed a cup of tea on the deck, a barred owl flew into the tree, standing next to the deck. It was a big owl, and we could hear and feel the flapping of its wings. It flew to a low branch of the redbud near the empty clothesline. There it sat and watched the three of us. I kept watching its facial expressions. It really looked at us and studied us. As other small birds, cardinals and a single chickadee, flew and settled near it, the owl did turn its head and followed their flight with its eyes. At one time, I watched a screeching blue jay dive down on the owl and peck. The owl shrank, but did not move. It kept looking at us. At times it looked sad, and other times haughty, then focused and attentive. We expected something would happen. If nothing else, the owl would take off with large wings flapping. We were not disappointed, as all of a sudden the owl dove down to the base of the tree and stayed there. When Telina, with camera in hand, peeked around the tree, the owl sat there with wings spread, holding a young rabbit. The owl did not move, but looked fierce. It's mine. From its perch, where it had settled, the owl could watch where rabbits hopped out from under the porch. He or she had patiently waited and got the second chance. After a little while, the owl hopped with prey into the open. As we left it, it must have lifted off and flown away with its prey to what we think must be a nest with young. The owl was back sitting on the branch after a very short while. At one time, I saw it walk on the grass and retrace the path it had dragged the rabbit. I expect to see if by chance any edible parts had been left. Because the owl came back and sat on the same branch, it expected more rabbits to come out. I hope it is as good at catching pack rats. The whole scenario was like a slow-motion film. To see it all happen in front of you while having the early cup of tea is quite amazing. A drama. Reading up on the barred owl in Birds of Kansas by Stan Tequila, I read the owl has one brood per year. So I expect the young ones, generally 2 or 3, have reached the age that they eat a lot. I expect one rabbit to be just an appetizer. The birds are non-migratory. Their territory is roughly a square mile. The smaller male may be driven off in winter to stabilize the limited food supply. With the cedars planted and now tall trees and the wooded area below the house, the habitat suits the barred owl. I know along the old and partly fallen rock wall there are plenty of pack rats. The two owls should have no problem to survive this winter. Clean the rats up should be their motto. True, it may be they like a change of menu, but a fat rat should be a treat any day.
Gus van Der Hoeven of Kansas State University with his weekly commentary on life in rural Kansas. That's our time for today. Thanks for tuning in. Eric Atkinson for Agriculture Today over the K-State Radio Network.